Hi, everyone, and welcome to today's Accounting Flow LinkedIn Live. I'm really pleased that you could all join us. My name's Casey, and I'll be setting the scene before handing over to Ben. For those of you who don't know Ben, he's the CEO of Accounting Flow and the managing partner of Sampson, making him the ideal person to be talking us through today's topic, tackling making tax digital for income tax self assessment. So, as an introduction to Accounting Flow, we began with a very simple mission to make accounting processes smoother, smarter, and far less of a headache for both accountants and their clients. Over the years, we've seen just how quickly the profession is changing. And one of the biggest shifts on the horizon is, of course, making tax digital for income tax. When we were first building Accounting Flow, it was about helping firms streamline their day to day, cutting out those manual, time consuming tasks. But what we've realized along the way is that the tools and workflows we've developed aren't just about saving time, they're about helping accountants stay prepared for big challenges such as MTD. And that's why today's session feels like such a natural fit, because ultimately we're all adapting to these changes together. So, in this session, Ben will break down what MTD for income tax really means in practice, the main challenges firms are facing, and most importantly, how you can get ahead of the curve. We'll then open up the floor for a live Q&A where you can put your questions directly to him. So, grab a cup of tea or coffee, settle in, and we'll get started. Ben, over to you.
Hi guys, it's Ben here, obviously. The point of these sessions, I believe, is to introduce how Accounting Flow is actually going to help moving forwards, how it is that we're going to tackle the various shifts in the accounting industry, in particular for this one, MTD. I believe Casey's got a couple of questions to ask, but I guess before that, it really is, I guess it's time for me to really explain why Accounting Flow actually came to help. So we initially started Accounting Flow because we had a genuine problem with how it was that we were going to be managing practice information, and certainly on a scalable level. While having a monster spreadsheet is good when you've got a couple of clients, when you're starting to get hundreds and thousands of clients, it starts to become a bit of a unenviable task to manage everything. So we started Accounting Flow because we couldn't find something else that would enable us to have a good oversight over what it was that we wanted to do. So we built Accounting Flow to store all of our client information, help us actually liaise with clients, certainly in terms of sharing information for signature, requesting information, etc. But then making sure that everyone within our firm was able to know what it was that they were doing, when they needed to do it, and give managers and parts of the senior team oversight or clear oversight on what needs to be done and what stage it was at. Then it's kind of been about taking it as far as we can. So anything where within your firm you're performing an admin task, how do we improve the efficiency at that is done? So in theory, reducing admin time and increasing the time that people have to spend on chargeable hours, which ultimately is an accountant's bread and butter.
Thanks, Ben. So, for those of people watching who don't know, what is MTD?
So MTD was originally, it stands for Making Tax Digital for starters. It was originally brought out for VAT and has actually, I would say, have been successfully implemented. The general idea of it is to make it so that anyone submitting tax records is keeping them in a digital file. For self-assessment and income tax, so that's obviously being the next hurdle that HMRC are trying to jump through after having, in their opinion, cracked VAT. The idea is to promote quarterly submissions rather than just have one final submission at the end of each year. There's a phased approach coming in. So the first year is going to be from the start of the next tax year, the 25-26 tax year. After that, and that's going to be for people with a 50k combined sole trade and property income. That's specifically not profit income. The year after that is going to go down to 30k to include more people, and then the year after that is going to be 20k, so to include, in theory, the majority of people. The problem for accountants is obviously that rather than submitting their individuals' annual tax returns as one filing, this is going to include an additional 4 filings. So you're going to be having to submit this on a quarterly basis for each of the different sole trade or properties. So if you've got a company, an individual with 20 properties, that's 80 returns extra that you're having to submit that year.
Okay, great. So I know there's been quite a lot of delays. What is your view? Do you think MTD is really happening, or do you think there'll be more delays?
Just going on the basis of the history of what we know. So, I mean, MTD for VAT purposes was meant to come in, I think it was 3 years before it actually did. And once again, they're always attempting staged approaches. Now, while this is a staged approach, the first year is coming in pretty imminently. And you'd like to think that if they're not going to implement it, that they would have told us by now. So I think everyone should assume that it is going to happen. But at very least, it will be that staged approach where we're going to start off with with those earning over 50k in total.
And what should people do if they need help with MTD?
So just looking at it from an accounting firm perspective, the main challenge I think is going to be to find a software that works for you and your clients. So you ideally would like one piece of software, but it's not necessarily going to be the case that you're going to have one piece of software that works across all of your clients. Speaking from what our plan at the moment is to do, is we're going to use QuickBooks for all of our sole trade clients, and we are looking at how we can also use QuickBooks for our property clients. There are going to be some circumstances where we may have to use a more maybe property specific software, and Hammock is currently looking like it's going to be our option. The trying to work it out ahead of when you're actually doing it is probably a good idea. So we've actually got some we call them guinea pig clients who are we know them very well, and they're going to help us try and work out in advance exactly what works, what the process is, etc. I would recommend you do that. Otherwise, you're in for a frightful April to June, the first quarter, which I would imagine you're going to have a lot of clients asking you a lot of questions about how to do things all at once in probably quite a busy time for your firm. So trying to nail down that process in advance is pretty crucial. From the client's perspective, I'd listen to your accountant. Your accountant will probably ask you to do a couple of things. One in particular is sign up to the software that they deem appropriate. So I'd get ready to do that. I know that a lot of the softwares, certainly QuickBooks and Hammock, that we've spoken to in depth about this, are offering training as well. So you can actually speak to those software providers, and they will give you one-on-one training, or you can join group sessions with them and their teams as well. It will be a bit of a process, I warn you, but if MTD for VAT is anything to go by, you do become accustomed to it, and it will just form part of your quarterly routine.
Okay, great. Thanks, Ben. So now I think we can open up the floor to any questions. So if anybody has any questions for Ben, please feel free to pop it into the chat box now. But whilst we wait for those to come through, just a question from me. If I don't have any property or self-employment income, will MTD still affect me?
No, at the moment it is for those, certainly for next tax year, it is for those with sole trade and or property income totaling over £50,000 in terms of income. Once again, not to be confused with profit. If your income is P60, POE, just through your employment, and you don't have anything else going on, then no, MTD will not be applicable to you. That's not to say that in 5 years' time, once they feel they crack the sole trade and property owners sort of area, that it won't apply to you. But for now, no, there is nothing you have to do.
Thanks, Ben. So it doesn't seem like we have any questions just yet. So I'll ask you another one. Will the due dates for paying tax change under MTD?
That is a very good question. So the returns need to be filed every quarter. In terms of the tax due, it's a very good question. I'll give you that. Sorry, my headphones went a bit wrong there. In terms of what is in the actual dates of when you pay the tax, is still going to remain the same as under self-assessment. So you need to make the final, obviously your final payment or balancing payment on the 31st of January, the following year after the tax year end, and then you're still going to be making payments on account in respect of it, in respect of future liabilities on the 31st of January and the 31st of July.
Okay, thanks, Ben. So we do have a question from Catherine. She wants to know, do you expect the quarterly returns to be management accounting style?
No, I mean, if you want my, I guess, facetious opinion here, the quarterly returns aren't actually required to be that accurate. From HMRC themselves, having spoken to them, effectively they say that the quarterly returns just need to basically be you pressing a button saying that you do keep your records digitally. Now, in reality, that's not going to be the case, and given the professional standards that Catherine, I know in particular your firm as well, have, you want to get them as accurate as possible. The quarterly returns are generally going to be in, let's imagine you do them in QuickBooks or you do them in a similar software. It will effectively be you producing a quarterly P&L and balance sheet as you would normally, and then it's just going to be a more similar to a VAT return than actually a detailed management reporting style.
Okay, great. Thanks, Ben. So I think those are all of the questions that we have for now. So we could probably leave it there. So yeah, thank you everyone for tuning in. Thank you, Ben, for giving us your insights. And I look forward to seeing you all next week.
Right now, thanks, guys.